Can you help us understand what's taking place here? Because obviously the journalists who are reacting to this flow data at the moment see this as a one-direction movement. Is that how you're experiencing it at the CBOE?
Good morning. Yes, it is indeed what we've seen. The shift in share trading from the UK in EU listed names from the UK to the Netherlands was certainly unprecedented in its size and the fact that it all happened overnight on the 4th of January. But it wasn't unpredicted. It was certainly signalled through the Brexit negotiations, and the financial services industry saw that for share trading at least, that no financial services deal would be in place. And so what we've seen is that the planning that the industry and ourselves put in place has paid off. So we launched in October 2019 with our Dutch venue, and that was really to put ourselves in a great position, ready for the end of the Brexit transition whenever that would occur. And the key thing for our customers, given we're the largest pan-European stock exchange servicing 18 securities from 18 countries, it was really important that financial stability and that continuation of service was really provided. And certainly we see that shift is now pretty much permanent, and it would really take a major catalyst to induce the industry to look elsewhere to trade European shares.
The Governor of the Bank of England has sort of been running his hands through his hair and asking the question, what is actually materially different from the rules that apply in Europe to the rules that apply in London at the moment? And he doesn't seem to understand why equivalence has not been granted. Do we assume then that this is basically just about market share, and equivalence won't come as long as there is a desire in continental Europe to take business from London?
I certainly think for the share trading side of financial services, I see no likelihood of an equivalence deal. As you say there, overnight, nothing really changed from the UK being equivalent and applying the MiFID rules for the share trading out through to January the 4th. So on paper, there's no real difference. So you could ask the question theoretically, why was equivalence not granted? It hasn't been, and there's certainly no incentive for the European Commission and ESMA to look towards providing equivalence, given that share trading has now moved, as we said, pretty much permanently to Europe.
David, interesting comments over the weekend from Xavier Rolet, the former LSE boss, effectively saying the loss of that share trading to Amsterdam or the like is really a sideshow. He would be more focused on the loss of any trading clearing of G20 interest rate swaps. He says that's a barometer of London's attractiveness. Do you agree? Is that more relevant?
I'm not sure it's more relevant. It's all important in terms of the equity capital markets are fundamental for democratizing wealth creation, for raising capital, and they really are the initial, the heart of any financial services ecosystem. So although in notional terms on a daily basis they are dwarfed by the notional sizes of interest rate swaps and credit default swaps, which are subject to that derivatives trading obligation also. So in terms of notional terms, yes, it's smaller, but it is fundamental and it is important to the financial ecosystem. So shouldn't just be waived as a non-event, and it's certainly something to pay attention to, and certainly something that we see the UK government and the City of London responding to as we look forward.